Let's begin with a familiar image. In any film about international trade, from an oil deal in the Middle East to a negotiation in Shanghai, the currency mentioned is almost always the US dollar. For decades, holding the dollar has been synonymous with holding safety and power. When an Australian company exports a shipment worth 1 million USD to Europe, they receive dollars. When the Central Bank of Japan wants to stabilize its economy, it buys US government bonds in dollars. This is absolute dominance, the world's unofficial gold standard after the real gold standard collapsed. However, that rock-solid image is now showing clear cracks. The value and influence of that same $100 bill are facing unprecedented challenges. Whereas nations seeking alternatives to the USD was once a distant idea, it has now become a clear strategy. The BRICS nations are actively promoting trade in their local currencies. Saudi Arabia, a pillar of the petrodollar system, is considering selling oil in other currencies. Confidence in the stability of the US economy and its public debt is no longer absolute. This contrast is the focal point of today's analysis. We will embark on a multi-dimensional journey to understand this power shift. First, we will go straight into the eye of the storm with a dramatic hypothetical scenario. Why did the US dollar witness a record-breaking decline in 2025? Second, we will turn back time to learn about the history of its birth and the turning point that elevated the USD from a national currency to a global hegemon. Finally, we will review the notable ups and downs in its history, analyzing the reasons behind each period of growth or decline to see that its current position is no accident. Our goal is to provide a comprehensive overview, helping to better understand the power, volatility, and challenging future of this iconic currency. Why the US dollar plummeted to a record low in 2025. 2025 was a tumultuous year for the dollar. An unprecedented decline occurred not due to a single cause, but from the convergence of multiple storm-causing factors at once. The first was the sudden policy pivot by the Federal Reserve, Fed. After a long period of monetary tightening to combat inflation in the early 2020s, the U.S. economy showed clear signs of recession by late 2024. To salvage growth, the Fed was forced to implement a series of sharp and rapid interest rate cuts in the first half of 2025. Low interest rates reduced the appeal of holding dollar-denominated assets, causing international investors to sell off en masse, creating immense downward pressure on the currency. The second was a crisis of confidence in America's public debt. The U.S. public debt burden, already at a very high level, continued to swell after economic relief packages. Fierce political debates over raising the debt ceiling and the risk of a technical default, even if temporary, severely eroded the confidence of major international creditors like China and Japan. They began to diversify their foreign exchange reserves, reducing their holdings of U.S. government bonds and triggering a second wave of sell-offs. The third was the rise of alternative payment solutions. The de-dollarization efforts, led by economic blocs like BRICS Plus, achieved a significant breakthrough. The launch of a common cross-border payment system and the trial of a joint digital currency for intra-bloc trade reduced dependence on the USD in major energy and commodity transactions. As oil and other resources began to be traded in other currencies in significant volumes, the global demand for the dollar fell sharply. The combination of these three critical factors, low interest rates, a crisis of confidence, and competition from other currency blocs, created a perfect storm, pushing the DXY index, which measures the strength of the USD, to its lowest level in decades. The history and turning point that made the USD a global dominator. So how did the USD attain a position of power only to face such challenges? Its history is tied to two crucial milestones. The initial birth. The US dollar was officially created by the Coinage Act of 1792. Initially, its value was defined by a certain amount of silver or gold, a system known as bimetallism. However, for its first 150 years, it was merely an ordinary national currency. The historic turning point, the Bretton Woods Agreement, 1944. This was the moment that enthroned the USD. After World War II, Europe's economy was in ruins while the US economy was booming and held the majority of the world's gold. At the Bretton Woods Conference, 44 nations agreed to establish a new global financial system. In this system, the US dollar was chosen as the central reserve currency. Its value was pegged to gold at a fixed rate of $35 equals 1 ounce of gold. All other currencies would peg their values to the USD. This system made the USD indispensable in international trade and finance. Every nation needed to hold USD reserves to stabilize their exchange rates and conduct transactions. The Nixon shock in 1971. This system collapsed in 1971 when President Richard Nixon announced the end of the direct convertibility of the dollar to gold. The reason was that spending on the Vietnam War and social programs had caused high inflation, eroding the real value of the USD. Since then, the world entered the era of fiat money, where the value of currencies is determined by supply and demand in the market. However, the USD's central role was maintained due to habit, the sheer size of the US economy, and the dominance of its financial markets. The notable ups and downs of the USD. Since the Nixon shock, the USD has gone through many volatile cycles of growth and decline. Weakness, late 1970s. After being floated, the USD weakened due to high inflation and stagnant economic growth in the US, the stagflation phenomenon. Strong growth, early 1980s. Fed Chairman Paul Volcker raised interest rates to record levels to combat inflation. High rates attracted a flood of global capital into the U.S., causing the dollar's value to soar. However, this harmed U.S. export industries. Deliberate weakening, 1985, the Plaza Accord. An overly strong dollar made American goods too expensive. The U.S., along with Japan, West Germany, France, and the UK, signed the Plaza Accord to coordinate intervention and proactively weaken the USD to boost U.S. exports. Growth, late 1990s. The dot-com bubble boom at a strong U.S. economy attracted a large volume of investment capital, helping the USD appreciate again. Weakness, 2000s. Following the 9/11 attacks and leading up to the 2008 global financial crisis, the Fed maintained low interest rates for an extended period, causing the USD to weaken against other currencies, especially the euro. Strong growth, post-2008 and early 2020s. During global crises, the USD reaffirmed its role as a safe haven asset. Investors sold risky assets and flocked to buy USD, causing its value to rise. Most recently, the Fed's aggressive interest rate hikes to fight inflation also pushed the USD's value to a 20-year high in 2022. The primary causes behind these fluctuations have always revolved around a few core factors: interest rate differentials with other countries, the health and growth rate of the U.S. economy, Fed policy, the level of global risk, and investor confidence. From these analyses, we can see that the U.S. dollar is a complex entity. Its glorious history was built on a strategic turning point at Bretton Woods. Its strength constantly fluctuates, dependent on America's domestic policies and the global context. The scenario of a record decline in 2025, though hypothetical, outlines the very real challenges the USD is and will be facing: enormous public debt, geopolitical competition, and the trend of de-dollarization. The future of this king currency will no longer be a straight line, but a road full of unpredictable variables. If you wish to discuss this content further, please leave a comment in the section below. For now, Mr. Know-It-All says goodbye and see you in the next analysis.